Alrighty, good afternoon, everybody. We'll go ahead and get started here, and I'll welcome you to today's webinar. What we're going to be talking about is intro to the value charts and MQ indicator suites. So in other words, what we're going to do is we're going to go through and take a look at what all the indicators are, both from the value charts bundles and from the MQ bundle, the micro quant indicator bundle. And I'll tell you what the purpose of each of the indicators is and what it's designed, what it was designed to do. So without further ado, let's go ahead and jump right in. Let me pull up TradeStation here. And what we're going to start off with is value charts. So, all right, so what value charts do is they plot price in one of 5 color-coded value zones, ranging from center green, which is fair value, and then above and below that is moderately over and moderately undervalued. And then above and below that, you have significantly overvalued and significantly undervalued. So again, the center green area is fair value. And then you have moderately overvalued and mod undervalued. And then significantly undervalued and significantly overvalued. Now what this is designed to do is designed to help you identify high probability entries. Because what value charts have done is they help you find where a market very rarely trades. Now, what it's not designed to do is you're not supposed to just buy or sell because you're red. All right, that's not the way it was made to work. It's made to work alongside all of your other analysis, whether that be momentum, whether that be significantly overbought, oversold, on support or resistance, etc. There's really 3 main things, though, that we here at Value Charts try to analyze before placing any trade, which if you're in any of the trading rooms, you know this because you see us do it every day. We look at the cost, we look at the momentum, and we look at the value. So value is one of the biggest components, one of the 3, and the way we identify that is via Value Charts indicators. Sorry, one second, let me fix this. Now, one thing to keep in mind with your value charts is it's not plotting price, all right? So if you look at your value chart at the bottom of the screen, you can see it's an oscillator. It's oscillating above and below this 0 line, which is a center line here. And it's adjusting based on volatility, the dynamic volatility units, which are listed over on the right-hand side of the screen. Where a normal price chart is going up and down based on price, this is an oscillator, and it's going up and down above and below 0 DVUs. From 0 to positive 4 DVUs and 0 to negative 4 DVUs is fair value. And then above and below that, from positive 4 to 8 or 7.99 is moderately overvalued. Anything 8 and above is significantly overvalued. From negative 3.99 to or from negative 4 to negative 7.99 is moderately undervalued, and then below 8 is significantly undervalued. And these adjust based on the volatility of the market you're in. Now, the parameters that I personally like to use with value charts, I don't normally adjust my scaling multiplier. Actually, I think I have never adjusted my scaling multiplier because it's not really needed. A 0.2 is typically where you want to be unless you really know what you're doing. But what I do adjust is this analysis period. All right, value charts are designed to work really well between a 5 and a 50 bar analysis period. I typically use a 5 bar analysis period, and what that does is it makes your value charts much more reactive. All right, so you're going to get overvalued and you're going to get undervalued much quicker than if you were using a longer analysis period. Now, if you're the type of trader that is trend following, for example, and you're looking at this market here, which is the S&P on a daily chart, and you want to identify high precision entries into this market, what you do is you use your value charts indicator, and this is how it's going to help you. I would use a longer analysis period because you're having a little bit bigger price swings when the pullbacks in this market, so maybe a 22 analysis period. And then when you dip down undervalued, that's where you're a buyer. So you're using this to filter out when you want to be buying this market. So you're buying here. You're buying right down here. You're buying right there. You can see that corresponds to the undervalued price points. So you're using it alongside your opinion or your analysis that the market's going higher. It's not designed, again, just to buy or sell because it's significantly over or undervalued. By the way, if at any times you have any questions, feel free to send them in. We're going to do Q&A at the end. Dave Aquino is also going to be working on answering questions. By typing while I am
muted.
And then at the end of the presentation, we'll go through and do some more Q&A. One thing to keep in mind as well is that this is not a webinar designed to show you strategy, so to speak. It's just designed to show you how the indicators function, how to adjust your parameters. So again, with going back to what I was saying, value charts, the only parameter I'll really adjust with any of the value charts indicators is the analysis period. I like personally to use a 5-bar analysis period, but if you're getting bigger price swings from high to low, you might want to use a little bit longer of an analysis period, and I'll show you another example of that here in just a little bit when I show you value bars. Which, speaking of value bars, that's the next indicator we're going to pull up. So value bars, what we've done is we've just simply superimposed your value chart over top of your price bars. So let me make sure that the settings are the same on both of these so that they will match up. But you'll be able to see here that your value bars have simply color-coded your price bar to match up with your value chart. So instead of having to look up at the price and then look down at your value chart to see what value level it's at, you can just see it at the same time as analyzing the price. So you can see significantly overvalued on your value chart is going to line up with significantly overvalued prices on your value bars. Same thing works with the value bars, just like they set up the same way as your value chart, meaning moderately overvalued is going to be the upper yellow, significantly overvalued is going to be the upper red, moderately undervalued is going to be the lower yellow, and significantly undervalued is going to be the lower red, just like on your value chart. So color-coded, very easy to see. What's a DVU? A dynamic volatility unit is what sets value charts apart compared to other overbought, oversold indicators. What a DVU does is it adjusts based on current market volatility. So they will expand and contract the more volatile or choppy the market becomes, or the more smooth the market becomes. How would you tell a yellow-hat doji on the lower subgraph? What you're looking for is you're looking for a doji pattern like this, and you'd say, okay, the lower portion of that bar is moderately undervalued, so it'd be a yellow tip doji. You're colorblind. Can the yellow and green be changed so you can see them clearer? Send an email into support@valuecharts.com and see if Min or one of the developers can help you out with that. Because I'm not sure, to be honest with you. I don't think so, but they may be able to have a workaround that they can use to help you out. So moving on to the next indicator. The next indicator we're going to do is the value levels indicator. So if you take a look at value levels here, what this indicator is doing is the exact same thing as your value charts and your value bars, except just displaying it in a different way. Because as you know, different traders like to see it like it displayed on their chart different ways. Some like it in the subgraph on the value chart itself. Some like it on the price bar with the value bar. Some like it with lines, similar to a Bollinger Band setup, where you have significantly overvalued in the upper portion, moderately overvalued in the second upper portion. The center green area is the fair value. Below that, moderately undervalued. Below that, significantly undervalued. And you can see here just how the DVUs work. So you can see when your volatility is very low, you can see how the market, your value bars will contract, so that the distance between your dynamic volatility units decreases. And then as the market starts to pick up volatility, you can see the DVUs expand. That's what helps you keep from getting really large, significantly undervalued price bars, or something just shooting off into oblivion. Now, one exception to this rule is, or one exception to that is when you have gaps in equities, because gaps in equities, they're going to gap through, and normally what's happening is what's called a value migration, where this at one point would have been overvalued, but since it gapped up, that's going to be the new fair value. So the market, you have to give it time to adjust, and your value charts will adjust within a few price bars to having that as the new fair value, and then basing them over and undervalued off of that. The shorter your analysis period is for all these indicators, for all your value charts indicators, the faster it will adjust. The faster your DVUs are going to expand and contract, and the faster it's going to adjust to value migrations. All right, let's go ahead and remove some of these. Another thing that I'll say as well with the value bars indicator, a lot of people have a hard time seeing seeing them with the default settings. One thing you can do with them is change it if you go over to the Style tab. So you format indicator and then go to Style. Over here you have V open, V high, V low, close, high 1, high 2, etc. Excuse me. Go to each one of these, increase the weight. So if you go through and you increase the weight on all of these, it will make it so that your value bars become thicker, and therefore it makes it easier for you to see the different value levels. So you can see how they just got a little bit larger. All right, continuing on with the rest of the value charts bundle, we have the price action profile. Now, one thing to keep in mind about the price action profile is this is not available on all the platforms. The price action profile, it's not on eSignal, TOS, or Sierra charts just because there's no way we can code it that way. But for those of you that are interested in just exactly how over or undervalued a market is, or how often, what the percentage of time is that a market trades in each value level, the price action profile is the tool for you. You can see here, right now we're at a DVU of 4.7. So you go over to the right-hand side, we see 4. So you're just below 5, but you're over 4. So you're at roughly 14% of the time it's going to trade in this area, 13% of the time. So what you'll do with the price action profile, if you want to know exactly how over or undervalued a market is, how often it trades in each area, you'll pull up your price action profile, and you can see all the DVUs lined up on the right, where it says ranging from 0 to positive 12 and 0 to negative 12. Normally, you're never going to get a market that trades negative or positive 12, but it can happen. Then you're going to look at the current value level, or you want to look at whichever value level you're trying to analyze from the past. For example, back here, you were all the way up at 9, 10 DVUs, and you can pull up this price action profile and you say, okay, if it was at 9 DVU of 9, that means only 0.27% of the time does this market ever get that overvalued. So very, very rarely does it get that high, which indicates that there's a higher probability of the market pulling back into fair value, or at least into moderately overvalued. So you can see exactly how often, and it should end up looking like a pretty decent sized bell curve. Now it's a little bit skewed for the S&P right here. You can see moderately overvalued right at the tip of the bell curve. The reason that is because we've just been in a solid uptrend all year long, or past couple of years. So it has had a lot of overvalued price bars. Oops. Let's go ahead and move on to the next indicator. We'll take a look at the value flags indicator. On TradeStation, I believe this is a show me. The way value flags work, you're going to format your analysis techniques. You have a couple more settings that you can adjust on your inputs with value flags. Now, your analysis period and scaling multiplier are the same as your value bars, okay, or as your value chart. So leave scaling multiplier alone. I typically adjust my analysis period to 5 because I like it to react a little bit more. And then what this is going to do is it's going to highlight for you any time that a market trades at a specific value point. So let's say we wanted to be highlighted every time the S&P pulls down significantly undervalued. All right, so what you do is you put a -8 DVUs here for value level, because remember, significantly undervalued is -8 or below. So we'd say, okay, highlight it every time there's -8, and then what this is going to do is it's going to put a dot above a price bar if it hits significantly undervalued. Okay, So you can see each time one of these dots, let's actually make these dots come a little bit closer. Whoops. Every time it gets significantly undervalued, it's going to place a dot above it. So if you didn't have your value bars pulled up here, it would make it very easy for you to tell, okay, this is a potential buy, this is a potential buy, because it just hit significantly undervalued. So it's going to tell you and alert you to whichever value level you want to see reached. Just another way of using value charts without having to put excess indicators up on the chart while you're looking at it. Continuing on, we have value scanner. Now the scanner is a little bit difficult to use. It's not available for eSignal and Sierra charts. There's an entire write-up on how to set this up and everything if you go to ValueCharts.com under the help section. So I don't want to get into doing it right now because you have to go through and scan all the markets, and that takes a minute sometimes. But what that'll do is you can set what markets, what value levels you want it to scan for, and what markets you want it to scan with or scan through, and it will alert you to whichever markets are trading at that specific value level or below or above that specific value level. So if you're looking for shorts and you want to find markets that are significantly overvalued, you can turn on the scanner, scan through all your markets, and it will say, okay, these 10 markets are significantly overvalued right now, sort of thing. So it will allow you to find markets that are over and undervalued without actually having to pull them up. Now let's go ahead and move on to the MQ indicators. But before we do that, let's see if there's any questions I can answer about the value charts indicators. They're all similar. All your settings are similar. The main thing you're going to be adjusting for all your value charts and value bars are the, sorry, mine just drew a blank, the analysis period. And again, you can use an analysis period anywhere from 5 to 50. I typically like to use a 5. I don't ever mess with the scaling multiplier. That changes the settings for your DVUs, and it can throw off your readings for over and undervalued if you don't do it correctly. So let's see, let's answer some questions. Yes, can I slow down a little bit? I apologize. I've actually told everybody in the trading room, let me know if I go too fast. I have to make a conscious effort to slow down because when I talk about things that I'm excited about, I tend to speed up a little bit. Yeah, you can make the bars thicker by, if you format your analysis techniques, go to the Style tab over on the left-hand side of the screen where it says V open, V high, V low, V close, etc. You're going to change the weight of all of those to whichever thickness you want for your bar thickness, and that'll adjust it, make it a little bit easier to see. Is this the same as market profile? No, it's different than market profile. It's based off of dynamic volatility units. Market profile is based on historical prices that were transactions that were paid at different price levels. Similar, but the algorithm's 100% different. Does the price action profile change bar to bar? The price action profile updates interbar. So you'll see it at the bottom. Let me pull up the price action profile again. At the bottom of the price action profile, and for some reason it just crashed. The bottom of the price action profile right here, you see where it has moderately overvalued, and it tells you, and it's sitting here adjusting as prices adjust. It'll tell you exactly the number of the current price where it's over or undervalued. So it adjusts intrabar. So do the value charts indicators. Your DVUs will adjust intrabar as well. So you'll see sometimes you'll see a bar that was undervalued at one point, and then it reverses and goes straight through the roof, way up into significantly overvalued, and it will no longer be undervalued at the bottom of that bar because your DVUs expanded and it is no longer in the undervalued price range. we use Apple as a current example on this chart, sure. Top and bottom dots don't match. I'm not sure what you mean. Define the term value migration. A value migration is this right here, where you jumped up so high, for example, in Apple on the daily, that it went way up and significantly overvalued. In the very next bar, it was almost entirely significantly overvalued. Well, what that was a value migration. Back here, that was significantly overvalued, but the market is now trading at a new fair value, and you can see value bars adjusted and made that price level fair value going forward. So value migration occurs when you have massive, massive moves, and what was once significantly overvalued from this consolidation period, this was significantly overvalued, but the new price that's considered fair value has been adjusted to up here. We'd like to see the value flag setting again. Sure. Let me pull up value flags really quick. Again, value flags are going to be located under Show Me tab for those of you using TradeStation. The settings, you want your analysis period to be whatever you typically use in your value charts. Again, I typically use a 5-bar analysis period. You do not change the scaling multiplier. The value level that you want, so if you want significantly overvalued, it'll be an 8. If you want significantly undervalued, it'll be a -8. So if we wanted to do only significantly undervalued price points, we do -8. The other thing you're going to want to adjust, depending on how far away the bars are based on the market you're looking at, the dot spacing. So for here, we probably want to use the 0.02 dot spacing. And then this bottom setting where it says flag above bars, if you want the dots to show up above the bar, you leave it as true. If you want the dots to show up below the bar, you set it as false. Once that's set, you hit OK, and you can see it's putting a dot underneath any price bar that was significantly undervalued. Sorry, reading questions. How do you adjust value charts for smaller time frames? I still use a 5-bar analysis period on smaller time frames. What you want to adjust it on is, if you do want to adjust your value charts, which I never do, I leave mine set to 5, but if you do want to adjust them, you look at the volatility that you're seeing. So if you're seeing markets that are really choppy like this, you're going to want to use a little bit longer of an analysis period. If you see markets that are really smooth like this, you want to use a shorter analysis period. The value bars cannot work with a candlestick chart. Okay, value bars only work on open, high, low, close charts. It'll give you false readings because no platform at the moment allows you to put a color, a price bar on a candlestick. Was there a webinar coming up for how to set up indicators on TOS? If you need help setting up the indicators on TOS, send an email into support@valuecharts.com. All right, so let's go ahead and move on. I will go ahead and start taking a look at the MQ indicators. There's a whole lot of questions. Again, at the end of this webinar, we'll go back and I'll answer as many questions as I can. But we want to make sure we get through all the indicators. So the first indicator we're going to look at is the MQ cycle finder. The way the cycle finder works is it's another oscillator. What it's attempting to do is it's attempting to help you identify when a market is entering up cycles or down cycles. As you know, throughout the day, a market cycles higher and it cycles lower and cycles higher and lower. So what this is doing is it's attempting to help you identify the strength of the cycle as well as which direction or which cycle the market should be getting ready to enter into. So the higher the histogram bars, what you're really looking at here are the histogram bars, the green and red bars. You're not really paying attention to the blue line unless you're just looking at the strength of a move. But the histogram bars, you want to see green bars green histogram bars for an upcycle and red histogram bars for a down cycle. You're in a strong upcycle if it's above the 0 line here. You are in a strong down cycle if it's below the 0 line. Again, red bars mean down cycle, green bars mean up cycle. So if you're looking to time your entry, so you want to get into a market when it's getting ready to go back into the up cycle, or let's say you're trying to get in long, for example, here the S&P, you want to get in it when it's getting ready to go into an up cycle. So you look here, there's a green bar. This is the bar. It says it's getting ready to go into the up cycle. The very next bar, it started to move higher. One thing to be careful of with the cycle finder, and this is actually a good thing, it will help you identify when a move is really strong in one direction or the other. You can see here when you have red down cycle bars and the market is continuing to climb, that oftentimes is very, very bullish. Or if you have green up cycle bars and the market is continuing to fall, that's oftentimes very bearish. So it shows that there's a lot of strength in one direction or the other. And it's a caution sign for you. So again, the cycle finder is going to help you identify whether a market is cycling into an upcycle or a down cycle. If it's above the 0 line, it's a stronger upcycle. If it's below the 0 line, it's a stronger down cycle. And you can also tell divergences with this indicator as well. A lot of times you'll see here's a big upcycle and then a weaker upcycle, and then you get a little bit of a pullback. Or the next one was even weaker upcycle, you get another pullback. So you can use this to tell the strength of up and down moves, similar to a momentum indicator. But all in all, what this is designed to do is help you time your up and down cycles for the market throughout the day. Let's go ahead and move on to the next MQ indicator. And again, I'll go back and answer all the questions once we get through the rest of the indicators. Next indicator we're going to look at is the MQ market strength. The MQ market strength is this indicator down here at the bottom with the red and the blue lines. The way this works is this is helping you to tell just how far a market typically moves when it moves up and just how far a market typically moves when it moves down. So if you go back, and it's kind of interesting when you do this, let's look at another market. Let's look at crude oil, for example. If you look at historical charts or the past, a market a lot of times will follow very, very closely to what it has done in the past. So blue bar, the blue line is up or an up move, the red line is a down move. And if you look back here, you can see right at about an 89-cent up move is where this market tops out before going into consolidation. So you can say, all right, historically speaking, crude oil will normally rally about 89 cents. So when you're up about 89 cents, you can be using that as a potential profit target. Or you can be saying, if it continues to go further, it has a lot of momentum, has a lot of strength to the upside. So you can see back here, when you blew through that 89-cent level, right here, you could have been saying, all right, there's a lot of upside potential here because we've ignored all the historical typical rallies. You can see on the right-hand side of the screen how far up and down a market normally goes. So it's going to go from 0, which is the market doesn't move, all the way up to, on these rallies here, it's at 0.89, so 89 cents. And you can see the current price, you're up about 35 cents. And these sellers are starting to come in. You can also time your selling. So if you're looking to get long a market, you can look at, okay, the typical sell-off is roughly 83 cents. So you can say, all right, when it's getting near 83 cents, I know it should be getting ready to turn. So you're timing your entries based on historical moves. All right. Another way you can use this, by the way, on tick charts works really well. Let's look at a 1000 tick chart, for example. You look at your cycle finder, look at the typical up cycle versus the typical down cycle. So your up cycles, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 different times where it peaked out right about 40 cents worth of a rally. So you can tell whenever you get up about 40 cents that that market is getting ready for a pullback. And you see right here, this was the 40-cent mark where you hit it and then it pulled right back down. Right over here, this was the 40-cent mark and it hit it and then pulled right back down. Same thing here. There's your 40-cent mark, it hit it and then it pulled right back down. So you can time it time your market and be able to tell how far a typical rally or sell-off normally will go based on the historic data that you have available. And that's what the MQ market strength is going to help you do, help you identify just how far a market normally goes up or down. All right, let's move on to the next MQ indicator. We'll take a look at the MQ migration. Now the MQ migration, this is a pretty neat indicator. By the way, the settings on your MQ market strength, you do not adjust any of the settings on the MQ market strength, and the settings on the MQ cycle finder. I typically don't adjust any of the settings on the MQ cycle finder. Now the MQ migration is a pretty neat indicator. The way this works is this helps you identify when you're in a migration. Remember we were talking about value migrations, when a market goes from one fair value zone and creates a new fair value zone significantly above or below where it's at. Well, the MQ migration here will help you determine when that is happening. So if you pull up your inputs, you can see you have your analysis period and scaling multiplier from your value charts. So you look at that, you say, okay, normally you want to have that set to about 5. You can use a little bit longer. With the migration, you may want to use a little bit longer. You may want to use a 15 or a 20 bar analysis period, or maybe a 10. All right. You have your high reference and your low reference, which is moderately overvalued and moderately undervalued. And then what this is going to do is when it's running lower like this, that means you are entering into a potential value migration to the downside. When it's blue, so when it's red, you have a value migration to the downside. And we actually want to do this on a time-based chart. When it's blue, that means it's moving sideways. It's in the correct fair value zone. When it's green, it's having a value migration to the upside. And this is one of the reasons why I like using a longer analysis period on here, like a 20. You can see this will give you a little bit more of an idea or an understanding of when the value migrations are going to occur when you have the longer analysis period. So you can see here, you're not in a value migration when you're up here at the top just chopping around, which is what that's telling you is that when you're undervalued, it should be getting ready to go back up. So if you have a blue MQ migration and you're undervalued, it should be getting ready to go back up. Or if you have an overvalued while you're blue, it should be getting ready to come back down. Now if you have undervalued while you're red, that's saying don't necessarily want to be buying that. It's migrating to the downside, so it should continue to go lower. When you have overvalued when you're green, that's saying you shouldn't really be selling that. It's migrating to the upside, so it may not necessarily come back down. Does that make sense? So blue means you're in the clear with buying and selling the over and undervalued price points. So you're using your value charts along with your MQ migration to do value range trading, meaning you're selling from overvalued and buying undervalued, and then buying undervalued and selling overvalued. You can only do that when your MQ migration is blue. When it's green, I would not be selling the overvalued because that means you're migrating to the upside. When it's red, don't be buying undervalued because you're migrating to the downside. Got it, Tony? So, for example, let's look at Apple again, because that one has some migrations a lot of times. You see here, when it's significantly overvalued like this, and it's jumping really high like that, this is green the entire time, saying don't sell those overvalued price points. Now right here, it's blue, so it is saying, okay, you can sell the overvalued price points. And it's also saying you can buy the undervalued price points. When it's red, it's saying don't buy the undervalued price points. It could continue to go lower. It's migrating down. So this is going to help you determine when a market is just normal choppiness or when it's experiencing a migration. So let's go ahead and move on to the next indicator. Again, we'll answer a lot of the questions here at the end. We just want to make sure we get through all of the indicators. The MQ migration index. This is similar to the MQ migration. It's measuring similar thing. It's looking at the high reference, the over and undervalued prices. Again, with your settings, you're looking at your analysis period. You can use anything between a 5 and a 50. The longer the analysis period, the smoother it's going to be. Typically, I use between a 14 and a 20. Your high reference and your low reference is whether you're looking at over or undervalued or significantly over or undervalued, so 4 or -4 or 8 and -8. Your look back period is the historical period that you're analyzing. So if you want to look back even further, you change your look back period even further back. Let's take a look at the S&P again. Now what this is good for is this kind of helps you identify the cycles in a market. You can see how it's pretty smooth trending up. So you're looking at potentially buying while you are green. So you buy when you turn green, and then you stay in it until you get red. So for example, here, you turn green there, you turn back to red all the way over here. Okay, so you had this entire nice up move there, and this is helping you tell when a market is moving up or when it's consolidating. All right, now what this is referencing, what this is analyzing, is it's looking at the strength of your up move, the strength of your down move. It's looking at how far over or undervalued a market gets and whether it continues to reach further and further into overvalued or further and further into undervalued. So it helps you measure how strong the up move is or when the up move could be subsiding. Or same for the downside. It tells you how strong the downside move is or when the downside move could be subsiding and getting ready to reverse. The blue line is just a lagging indicator of the histogram. But you can look at the strength, you can look at divergences using the blue line. For example, here, whoops, you have a low right there, and then you have a low right here, and then look at the blue line and look at your histogram, significantly higher low. So it's telling you that this down move did not have nearly the strength that the previous down move had. Now this is measuring a different metric than your MQ momentum. This is the MQ migration index. This is what this is measuring, is how far over and undervalued markets go, or how long they stay over and undervalued. And it's determining momentum based on the value. All right. So we'll go ahead and move on to the next indicator. Taking a look at the MQ momentum, which is my personal favorite. If you're in the trading room, you know that I use this on every chart. The MQ momentum, what this is doing is similar to an MACD, where you have a fast line and a slow line, which let me change this a little bit and make my slow line a different color. So you have a fast line and a slow line. Fast line is the solid blue line, the slow line is the dotted line, and it's measuring, the histogram is measuring the spread between the fast and the slow line. And what this is helping you to determine is the strength of up moves and down moves, the strength of a market when it's moving higher or lower. I use it typically for divergences. Now there's a lot of other momentum plays you can do. You can do inflections, you can do divergences, you can do golf clubs, all sorts of things. But you can see here, for example, this is how this helps you. So here's your first up move. That's this up move here. This is a nice bearish divergence. Here's your second up move. That's this up move here. You see how much weaker that up move is compared, and then you look at your indicator line slightly weaker as well. That's telling you that it's a bearish divergence and the market should pull back down from there. You see it end up pulling back down. Same thing goes for here. You look at this down move here compared to this down move, and you had a big down move there, and then a higher down move here. So you had a less downside momentum on the second dip compared to the first dip, even though prices were just about the same. So it tells you, okay, it's gaining upside momentum, so it should continue to go higher. Just like up here, before the big pullback we had in the S&P, you could see downside momentum was increasing, upside momentum was decreasing. So you had lower momentum, lower momentum, lower momentum, even though prices were all right at the same high. And then you saw the S&P turn around and sell straight back off. So what this is doing, again, similar to an MACD, is it is helping you determine the momentum that a market has in one direction or the other. Now, the settings for this indicator, I normally just use default settings. However, I know a lot of traders out there that use longer settings. So instead of using a 32, 5, and 5, maybe use a 50, 25, and 8. So just increase them a little bit. What that's going to do is it's going to smooth out your momentum picture. It's going to make it a lot easier for you to determine the waves of the market. So if you're in a nice uptrend like you were here, you could be looking at your momentum picture, seeing, okay, waiting to get in until your momentum starts picking back up to the upside. And then you're holding on to it all the way up until it goes back to downside momentum. So you can smooth out your momentum picture a little bit. The divergences, in my opinion, don't work as well when you do that. Now, there's still some divergences you can catch. I like the 32, 5, and 5 settings that are default, because that makes it a lot more reactive, makes it a lot easier to identify the divergences. But if you smooth it out a little bit and use longer analysis periods, it's going to make it easier. It's going to smooth out your momentum picture, so you're not going to get choppy things like this. All right, continuing on to the next indicator, the MQ regression. By the way, at the end of this webinar, I'll show you a very simple trend following strategy using these indicators that's very effective yet very simple, which is the way I like it. Now, the MQ regression, that's what looks like this moving average here. It's not a moving average, okay? So you're not paying attention to the location of the MQ regression. What you're looking at is the color. You want to see green or red. Green means uptrend, red means downtrend. One thing I like to do with my MQ regression is I go to the settings. So you're going to format your analysis technique. You're going to go to the style tab. You're going to change the weight, make it a little bit thicker. That makes it easier to see. So you can see that made it a little bit bigger, made it a little bit easier to see. So again, green means uptrend, red means downtrend. You're not paying attention to the location. Now, what I like to do with my MQ regression as well is I don't want to pay attention to these short-term choppy trends. I want to know what the overall trend is. So what you do is you go to your length, you change your length. The default setting is 14. I like using a 100 bar setting. You can see here, this will keep you in trends much longer. So it takes a much bigger pullback to make it shift trend direction from red to green. And it'll give you a little bit smoother of an outlook, and it'll make your trends last a little bit longer if you use that longer length. The longer the length you do, what it's going to do is it's going to analyze the overall move. So obviously the S&P is an uptrend. If we change this to 150, it'll stay in green even more, because it's looking further back and saying, okay, generally speaking, this far back, it's been in an uptrend. All right, so all you're doing is paying attention to the green and the red with the MQ regression indicator. And again, you're changing your settings from a 14 default. Typically, I use a 100 bar setting. Continuing on, we have the MQ trend. This is another trending indicator. Now, with TradeStation, I don't know about the other platforms entirely, but with TradeStation, it sets it up down below it. What you want to do is you want to click on this and drag it up to same axis as underlying data. Okay? And there you go. It'll show up right on top of your price chart, just like this. Now, it looks similar to a parabolic SAR, and that's what a lot of people think it is. A parabolic has completely different logic, though. The way a parabolic will work is as price moves higher, the parabolic will accelerate towards price. The further away price gets, the faster the parabolic will accelerate towards it. This uses what's called chandelier logic, and what it's doing is it'll move at a set pace up or sideways, or down or sideways. The way you use this indicator is a green. If it has a green dots, it means that it is in an uptrend. If it has red dots, it means it's in a downtrend. The way it shifts from uptrend to downtrend is if you get a close below the green dots, it's going to shift it to a downtrend. If you get a close above the red dots, it's going to shift it to an uptrend. Now, the settings you can use with this, I typically use default. But if you want to be a little bit more reactive, I don't normally change the length or the ATR length, but the ATR multiplier, I'll adjust that. Sometimes I'll use a 3. That will bring it in a little bit more, so it'll make it shift trend direction much quicker. Again, I don't really change the other settings on here. Typically just leave it at 21 and 21, and I use a 3. But if you want to look back further, you can adjust these to larger numbers. So this is the distance back, the number of bars back that you're analyzing to determine the trend. And then the ATR mult is how far away you're starting when it shifts trend. So again, if you want to be a little bit closer, change your ATR multiplier from a 4 to a 3. The way that you're using this indicator, once more, is green dots mean uptrend, red dots mean downtrend. Again, I'm going to be answering as many questions as I can at the end. We're going to have around 45 minutes to answer questions, so I'll try to get through all of them, and I'll pull up whichever indicator we're talking about when I'm answering the questions. The last indicator on here is the NQ Trend Index. This is a really neat indicator. The way this works is similar to your trend indicators. It's helping you determine which direction the overall trend is, except this also helps you determine when you're going into consolidation. All right, so green bars mean uptrend. The light blue bars mean consolidation or potential reversal. Red bars mean downtrend. The pink bars mean consolidation or reversal. One of the things I do like doing with this indicator is adjusting the settings on here. Instead of using the 25-14-1, you can change a little bit, make this a longer number. I would encourage you to take the indicators and go experiment with them, see which settings you like the most, but you can change the length or the number on these slightly higher and it'll smooth it out a little bit. You can see it'll keep you in uptrends a little bit longer, downtrends a little bit longer as well. So I would definitely encourage you to experiment with that. But this indicator, again, green bars mean steady uptrend with good momentum. Blue bars mean consolidation, potentially reversing. Red bars mean downtrend with good momentum. Purple bars, consolidation, potentially reversing. So that being said, that's all the indicators for the MQ indicators. Let me show you this strategy, one strategy that utilizes the value bars indicator and utilizes the MQ trend, which is the trend indicator with the dots, red dots being downtrend and green dots being uptrend, and how this works. Let's turn this on. So we're going to look at the S&P on a daily. Let's change this to a 14 bar setting, which is the default for your value bars. All you're doing, remember I told you the value bars and value charts are not meant to be bought or sold just because they're red or yellow on either end, but you have to use them alongside your analysis to determine which direction to be trading, that they help you determine the best entries. Here's a perfect example of a strategy that does that. So if you're trend following, obviously you want to be buying when the dots are green, you want to be selling when the dots are red. Well, if you're trying to determine when to get into a market, you don't want to be buying up here because you could be getting ready for a pullback. So you might have to go through a little bit of pain before the market actually gets in your favor. However, if the dots are green, you're looking to buy undervalued. So you're using the value chart as the filter for when to get in, because what that does is it increases the probability of the market moving in your direction much sooner and getting you into a profitable trade. Now, when it changes direction here, you got to be careful, because if this sort of thing happens, this is why you use stops. If the trend shifts back to an uptrend again, you can get chopped up a little bit if the market doesn't really follow through. But when the market's trending very smoothly, this is a great way of using value charts alongside an outlook and finding high probability, lower risk entries. So again, undervalued, trend is up, you're buying. Undervalued, trend is up, you're buying. Undervalued, trend is up, you're buying. And then you start throwing in other things, which if you're in the trading rooms, you've seen us do this before. You start adding other indicators in that help you determine other things, like the MQ momentum. So you look up here and you say, okay, I may not want to be buying up there. Let me erase the drawings. So you're looking up here and you're saying, okay, trend is up, it is undervalued, but I may not want to be buying up here, and I may not want to be buying right here because momentum is significantly weaker. So then you start looking at it, all right, I only want to buy when we have stronger momentum and we have a nice uptrend. So you're buying here, you're buying up here because you have higher momentum lows. You're buying up here because you have higher momentum lows from this dip. Your momentum was increasing back up from your histogram. All right, so pretty simple strategy, works really well. Pretty neat way of trading trends using value charts in the MQ trend. Now, one of the things, if you like day trading, what I would look at doing is using tick charts or using very short-term charts. So let's take the S&P, for example. Look at a 1,000 tick chart. Whoops. This is one of, if you're in the trading room, you know we do this all the time. You look at the 1,000 tick chart, your trend is up because we have green dots. So you buy undervalued. So you're buying right there, or you're buying right here, or you're buying right here, or you're buying right here. As long as the trend is up, you can buy undervalued. If the trend is down, you're selling overvalued. So you're selling right there, you'd be selling right here, but then the trend shifted, so you'd be out of it very quickly. So very, very simple strategy that you can use intraday and end of day. I typically like it on tick charts the most. Alrighty, now let's go ahead and go through and we'll start answering as many questions as we can for the next 45 minutes or so until the end of the webinar, because I know there are a whole lot of them. All right, show the trend index settings you use again before I close out. Sure, let's go ahead and insert the MQ trend index. I typically stick with default, but you can change the trend length to a longer length and it will smooth it out a little bit. Again, you're going to the very top setting, trend length. You can also change the trend smooth, make that a little bit longer and smooth it out some, and make it even smoother, make it easier to see. So you can use this as well to time entries. For example, if you're looking to time your entry into the S&P, if this market's trending higher like it is right now, you're looking to get in as soon as this turns green. So you don't want to be buying while it's consolidating, but once it starts trending up again, you do want to be in it. So right there you can see change to green, stay green the entire move here to the upside. So again, the MQ trend index, green bars mean uptrend, blue bars consolidation or reversal, red bars downtrend, pink bars consolidation or reversal. Have any of these indicators been encoded into strategies? If not, why? Yes, they have, but they're not available right now. I know Mark does workshops on coding automated strategies, and he helps. I know he's helped some people with getting that set up using automated strategies alongside the indicators. What is the situation currently on the S&P? We're not. The S&P is moving up. We've been expecting it to retest the 1845 level in the trade room for a little while now, for the past week and a half basically. So, or 2 weeks actually. Can I go over the market strength indicator again, please? Absolutely. Let's go ahead and pull up the MQ market strength. The way this works, again, the blue line is how high the market normally goes, or how high the market is going. The red line is how low the market has gone. The way you can use this is you can use it to say, determine when pullbacks are getting ready to happen. So if you look here, you want to find basically where your average rally ends. So you had up here, you had 1, 2, 3, 4, 5, 6 different rallies that peaked out right around 3.5 points. So when the market has rallied 3.5 points like it did right here, you're saying, okay, it could be getting ready to pull back, because typically it doesn't rally much further than that before you get a little bit of a pullback. Same thing over here, you rallied 3.5 points, you got your little bit of a pullback. Same thing over here, rallied 3.5 points, you got a little bit of a pullback. Now it did go a little bit further, but a lot of times this will help you with determining just how far a market will typically go on a pullback or on a rally. You can also look at the red bars. The red line is how far down it typically comes. So you want to go back, you want to find as many peaks in the same area as you can, and then you're going to look to time it. Okay, it normally comes down this far, so right there, it ends up turning right around in the next couple of bars. Same thing here. Peaked out right there, right about 2.25, stopped right there and pulled back up again. Same thing over here. Pulled back 2.25, stopped and pulled back up again. Is the webinar recorded? Yes. Bought the basic package recently and I really liked it. This presentation is really encouraging you to add more. Any possibility of doing that? Yes. You can add to your indicators if you've already bought one of the other bundles. You can add or upgrade to another bundle, and you'll get a discount equivalent to what you paid for the original bundle. By the way, if you're a platinum member, feel free to send an email into support@valuecharts.com, and if you're interested in the indicators, you'll get a 30% discount. Just tell Min, and he will help you out with getting that discount set up. You'll get a 30% discount off the indicators if you're a platinum member. Can I use tick charts on gold futures? Yes, you can. You can use tick charts on gold futures. You can use them on equities. You can use them on anything. Can I show this one? Stocks like Apple? Sure. Let's take a look at Apple. Again, we're looking at tick charts here, but you can see if you were just trading that trending strategy, it did pretty dang good. I mean, you had a nice long entry here, longs here, 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 here. Now this one reversed and you got stopped out, but again, it's not going to work 100% of the time. Obviously, no trading strategy does work 100% of the time, but the majority, you're getting some pretty good entries. Do I use the MQ momentum signal buy indicator? I'm not sure what the MQ momentum signal buy indicator is, Elizabeth. I think you're talking about a strategy from one of the workshops. How do you manage risk using these same tools to trade? Because what you're doing, one of the ways that you're managing your risk is by only entering at the appropriate value level. You know, you statistically speaking have a much higher probability of the market moving in your favor before moving against you. So for example, if you're buying down here, you can typically use a much tighter stop than if you were trying to buy up here at overvalue. There's a lot of different ways for stop placement, so it depends on the strategy that you're using. So one of the things you can do if you're looking for a point to place your stop, if you're trading this trend following strategy like this, you buy it at undervalued, and as long as the dots are green, you want to stay in it, because as long as the dots are green, it's going to continue higher. So you can place your stop just below the MQ trend. Or if you're short, your stop goes just above the MQ trend. That way it gets you out if it changes trend, but as long as the trend stays green, you'll stay in it. Does the MQ market strength apply to Forex as well? Yes. Hold on. Sorry, I'm losing my place. Too many questions coming in. When you get to the costs on the indicators, if you're interested in them, are $9.97 for the core bundle. The ultimate bundle is $14.97. The plus bundle is $5.97. Again, if you're a platinum member, you get a 30% discount. Just send an email into support@valuecharts.com, and Min will help you out with getting whichever bundle you'd like. The ultimate bundle is the one that includes both the value charts and the MQ indicators. The value charts core bundle only includes the value indicators, such as the value bars, value charts, value flags, the original ones we started looking at, the first ones. The plus bundle includes just the MQ indicators, so your momentum indicators, your trend indicators, your strength indicators, etc. How about, I can absolutely do that. Can I pull up? This is what we normally look at in the trading room. Okay, this is what I analyze when I'm looking at the markets. I have my momentum, I have my cycle finder, I have my values, and I have my trend with the MQ trend. For example, if I was looking at a market, let's pull up a market right now, see what it looks like. Well, gold if you're looking at gold, let's look at this 30-minute chart here. You're looking at your momentum, you're looking at the strength, you're looking at the up move, you're looking at your cycle finder. So you see the gold came down. We had what we call a bull flag here, where you had lower highs. As soon as you broke the high, you had strong upside momentum, so your momentum was increasing. You're long as soon as you break the high. Your cycle finder was cycling back to an upcycle as of the previous bar. So it gives you the okay to go ahead and get in it. You had strengthening upcycles. You can see this was the previous upcycle, stronger upcycle. This was your previous high on your momentum. Your new high on momentum was much, much higher. So you had strengthening momentum indicator line, strengthening cycle finder, strengthening price bars. You had a pullback. You waited till your cycle finder tells you the okay, meaning it's getting ready to shift back to an upcycle, which is what the green histogram bar means. And then you're in it long, and it continued to climb. You can look at, a lot of times you can look at things like nat gas today. We had longs in nat gas in the trading room today, and what we were looking at was the momentum, and we were looking at the price. So you had a nice trend line here coming up across all the lows on your 60s. Your momentum had increasing higher lows. So you had higher lows in your momentum, higher highs on your momentum. Your cycle finder, same thing, higher highs. We came down, undervalued price right on top of the trend line. So you were undervalued right there on top of a trend line with a lot of upside momentum. It gives you the okay to get long. Your risk is what, 10 ticks, 20 ticks, and you're up 200, 300 ticks now, or 250 ticks. So that's how you start taking these, and you combine the indicators together to get an outlook, and then you find a value-based entry based on your outlook from momentum and price. Okay. Yeah, does the market strength apply to Forex? Yes, it does. So let's go ahead and pull up, let's look at the euro dollar. Euro dollar, you can see here, if you're looking at historical rallies versus sell-offs, you typically rally, oh goodness, let me get rid of snap mode. You typically rally right around 50 pips before getting a reversal or consolidation, or before back here you were rallying about 43 pips. So you're looking right there, you hit 43 pips right there, and then it pulled back. Right here, you hit 43 pips, and then it pulled back. Right here, you hit 43 pips, and then it pulled back. Over here, just above 43, but you said, okay, typically it's been rallying 43, so we know there's a higher probability of it getting ready to reverse, and then it pulls right back down. Same thing right next to it, 43 pips, pull right back down. This is just looking at tick chart. You can use it on time-based charts as well. Can you set up in the radar screen to find for opportunities? I have not experimented with the radar screen, so I'm not 100% sure, but I believe the value charts indicator does work in radar screen. Please go to the cycle finder again. Absolutely. Let's insert analysis technique. The way the cycle finder works is it's helping you identify up cycles and down cycles in the market. Green bars mean up cycle, red bar means down cycle. So it's helping you to time your entries based on which cycle the market is in or is entering. So for example, if you are looking for shorts against a market that is climbing, you're going to want to wait until your cycle changes to red, and then you get in it. So you're getting in there, you did get your down cycle, then continued higher. If you're looking to get long, when a market has pulled down, you're waiting until you get your up cycle. So you're in it on the very next bar after the green bar. That ended up being the low bar before it ended up moving higher. Same thing over here. Wait till you get your red bar if you're looking to short it. Cycle was there. It pulls down, following the cycle finder down. So again, all it's doing is it's helping you determine turning points, basically, the up and down moves of a market, when it's turning higher, when it's turning lower. How do I change to 1,000 tick bar? You click in TradeStation anyway, you click on the chart and then type 1000 space TICK. Or you can right click on the chart, format symbol, go to your settings and change it right here. Tick, set the number of ticks, and then hit OK. what time frame do I use on futures like the S&P and gold? Are you talking about for the trend following strategy, Bobby? You use for the S&P, or for the S&P, you're going to use a 1,000 tick chart for the trend following strategy. For gold, you use maybe a 250 tick chart. Can I show you another example of a divergence with the NQ momentum indicator? Sure. Let's look at what's the market that's had a divergence here recently. Soybeans had a nice bullish divergence this morning on your 60s. By the way, for those of you that are in the trading room, you see where soybeans closed, don't you? Above the 40 level, which is good. It means we should get continuation to the upside tomorrow. Here's a nice bullish divergence. So here's your first set of lows. You look at your MQ momentum. You had a nice downswing there, big downside momentum. Here's your second set of lows right there. You came equally low prices, significantly undervalued. So the very lowest portion of that bar was significantly undervalued. Look at how much higher your momentum is. So significantly higher momentum. So prices were equally as low, momentum significantly higher. That's a bullish divergence. The exact opposite is a bearish divergence. Higher prices with lower momentum. Can you use these indicators on toss? Yes, you can. What does it take to access the indicators? You have to purchase the indicators. If you go to ValueCharts.com and you click on indicator bundles right here, you can see the 3 different bundles you can purchase. Again, if you're a platinum member, I would encourage you to get the 30% discount. So send an email into support@valuecharts.com and they'll help you with getting the indicators there. What does it take to access the? Why would you need more than the NQ migration chart alone for shorter period trades? You could very easily just use the NQ migration and use the value charts to determine buy and sell points. You don't necessarily have to use more than that at all. Can I give you an example of how I get an idea that the S&P might go back up to the old high using the indicators? Well, what we were looking at in the trading room when we were looking at the S&P saying it should bounce, we had a very nice, well-defined trend line here, and then we had what we call a yellow tip doji. So typically, a doji pattern is a neutral candlestick pattern, but when you combine it with the fact that you're undervalued, you then know that the probabilities are higher that it's going to go up instead of down. And then also the price action. This day, this price came and broke the previous low by, I think, 1 tick. The previous low was 32.25. We went down to 32. So you broke it by 1 tick and bounced right back up. Oftentimes, that's very bullish. And we were sitting here calling it out as it was happening in the trading room. Then the very next morning in the trading room, we said it's a buy because you had the candlestick reversal plus the trend line for support, plus the false break on the run on stops. And the S&Ps started to rally, and typically, just knowing the nature of the beast, what the S&P is, a lot of times it's going to go retest the highs. The NASDAQ, if you're in the trading room, you know we've already changed our opinion on the indices to neutral because the NASDAQ already hit the new highs. So it's from knowing the way a market typically acts. How do you know which indicator plays on what platform? They're listed there when you go to ValueCharts.com and you look at the indicators. When you click on the indicator bundles, it'll tell you right here at the bottom, Value Scanner is not available for eSignal or Sierra. Value Charts Plus is only available on eSignal. Price Action Profile, not available for eSignal, Thinkorswim, or Sierra charts. The reasons that they're not available for those markets is because, or for those platforms, is just because we couldn't code them for them. It just wouldn't work. You have the ultimate package. Are these all included and usable from the ultimate package? Yes, they are, Arthur. The MQ momentum indicator is used in the trading room. Yes, it is. Every single day on every single chart. Because remember, we look at price, so the cost of the market, what the current price of the market is. We look at the momentum, we look at the value before we place any trades. So we use MQ momentum to determine the momentum. Platinum members. Platinum members are, all right, Dave already answered that question. It's a subscriber. You get access to the options trading room, options and equities, and you also get access to the futures and forex trading room. You get access to signals via signal feed. You get a premium video every day with trade setups. You also get access to monthly newsletters with outlooks, as well as special webinars every once in a while. Does it work on Renko bars? You cannot use value charts on Renko bars because there's no volatility. So a DVU, a dynamic volatility unit, does not work when there's no volatility. The recording for this will be available at ValueCharts.com YouTube.com/ValueCharts. By the way, before I continue answering questions, I'll keep on going here in a minute, but I want to mention we have a workshop coming up next week on Wednesday. If you're interested in that, we're going to be talking about high probability continuation and reversal patterns. Normally, this is only $2.99. This last time I did a momentum workshop, it was $5.99. It's only $97. This is the only time I think I'm going to do this workshop for this cheap. So get your seat while you can. It's the 19th from 6 to 9 p.m. So next Wednesday, 6 to 9 p.m. Eastern time. We're going to be covering a whole lot of stuff. So you have the indicators, you know what they do. I'm going to show you strategies that utilize them for very high probability trades. Tell you when to enter, where to exit, where stop goes, all that good stuff. So we'll be talking about trading golf club. We'll be talking about divergences to find turning points. We'll be talking about bull flags. We'll be talking about inflections and a lot of other stuff. So if you're interested in that, just go to www.valuecharts.com/TOP. So /top. Again, it's only $97, and that will allow you to sign up for it. So high probability continuation and reversal pattern workshop, February 19th, 6 to 9 p.m. Eastern time, valuecharts.com/top. If you need assistance purchasing the indicators or the workshop, send an email into support@valuecharts.com, and they'll be more than happy to help you out. You purchased full package, 30%. See new breakout indicator for no charge or discount. Thank you. I'm not sure what indicator you're talking about, Isidore. The breakout indicator, we don't have a breakout indicator right now, unless that was one that Mark just had in a workshop. Which, if it was, send an email into support@valuecharts.com. If you were in that workshop and Mark said he'd get it to you, they'll help you get it. MQ trend seems to be lagging a lot on daily charts. It takes weeks to shift. It can be. That's why you can adjust. You adjust the MQ trend to make it closer. So if you're using a daily, the ATR multiplier, so ATR Mult setting, change that. Instead of using a 4, use a 2.5, or use a 2, or use a 3. Something less than a 4, and that'll make it shift from an uptrend to a downtrend much sooner. What's the best setting for S&P E-mini day trading? In my opinion, it's using a 1,000 tick chart, using the default settings on the MQ trend, and using the default settings on value charts. Works like a charm. I mean, you can see the trends that you catch in the S&P. As long as the S&P moves, it's going to get you in the trend, and you're going to have some great opportunities to trade it. So as long as the S&P moves, you're going to be on the right side of the trend if you're trading that strategy. Can a cycle finder be reversed so the spikes down are the bars that are down? Not sure what you mean, Diane. What do I look for primarily to decide what to trade? I look at the momentum. Again, I look at the value, momentum, and the price. There's a lot of different strategies that we trade. If you're in the trading room, what I would encourage you to do is attend the trading room. And when you're in the trading room, you'll see what we look for, because there's a lot of different strategies that we trade. It's not on Interactive Brokers, no. Could you show how to use the scanner and TradeStation? The scanner and TradeStation, it takes a while to set up, so I didn't want to go through that. And honestly, I'm not 100% familiar with it, with how the TradeStation scanner works. But if you go to ValueCharts.com, over here, you click on Support, go on Product Documentation, find TradeStation. This will tell you all about all the different indicators. Okay? So again, if you go to ValueCharts.com, here, I'll just send this out. Send you guys this link. Go to this link. You can get the documentation for whichever platform you use. Again, we're on Bloomberg, eSignal, MultiCharts, NinjaTrader, Sierra Chart, Thinkorswim, and TradeStation. You can read the documentation. That'll tell you all about all the settings and everything if you didn't catch it from the webinar today. We call a lot of S&P trades in a room. We normally call 1 or 2 a day. What we do is we call out setups. So we say, okay, this looks like this market should move higher, and then you know, the traders in the trade room know, okay, it should head higher. I'm going to pull up my tick chart and wait until it shifts to an uptrend and then buy on the undervalued dip, sort of thing. Occasionally I'll say, now's the opportunity to buy it if I see it, but we follow a lot of different markets, so it's hard to do that with everything. Can you see that a bar is undervalued while the bar is building within that day? Yes, you can. It updates intra-bar. Signal flags is the same as the show me. Are you talking about the trading room essay? Go to ValueCharts.com. If you want a trial of the trading rooms, go to www.valuecharts.com/go, and here's a link to that. Here's the link for the workshop. For those of you that are interested in finding or attending the workshop next week on continuation and reversal patterns and how to trade them. Tureen is in development. We're working on it. What's the difference between ValueCharts and Metastock? ValueCharts is not a platform. Metastock's a platform. I'm not sure what you mean by that question. All we're showing is indicators, but market strength indices. The MQ market strength, you can use it on any market you're looking at. All it's doing is it's analyzing the previous rallies and sell-offs that a market has had. Am I going to make a slide from the workshop available in PDF? For those of you that are in the high probability continuation and reversal patterns workshop next week, you'll get access to all the slides. So yes, you'll have pictures of the setups. Do you need the ultimate bundle to benefit from the workshop? It would help. Well, actually, I'm just going to go ahead and say yes, because all the strategies that we're going to be trading in the workshop, all the setups, all the ways of determining direction are going to be using the value charts indicators. So it would definitely help if you plan on trading the strategies yourself without being in a trading room. The February 19th session, is that for members only? No, it's not. It's a paid webinar. It's a paid workshop for anyone that pays. You don't have to be a member. Can I put back up the S&P intraday chart so you can do a screenshot, please? Sure. Give me 1 second. Here is the S&P on an intraday chart. Can't tell you anything about Tureen. It's still in development. Developers are working on it night and day. How do you get the MQ trend to show up under the price bars? Normally it shows up at the bottom, right? So what you're going to do is you're going to click it and you're going to drag it up, and then it's going to bring up a little pop-up box. You want to have it on the same axis as the underlying data. Or you can go to Format MQ Trend. Where is it at? Scaling. So you'll format the MQ trend. You'll go to the Scaling tab. It says Scale On. You want to put it Scale On same axis as underlying data, and then click OK. If you want to make it so it always does that, just make it default. Any problems using this on a Mac? If your platform, if your platform is supported by us, if your indicators are available on your platform and your platform works on Mac, then it should work perfectly fine. Yes, you can, SA. You suggest everyone get the Platinum bundle. It all works together and is very powerful. Yeah, Joyce, I would agree. They're all designed to complement each other, and once you get the hang of how they work, and it's like a golden shovel. You go in every day, you can tell where markets are going to go, and then you just take the trades, take the easy ones. How can you use indicators for scalping? Radha, you know, you've been in the trading room. You use it for divergences, just like we were talking about. If you watch the recording from the crude oil webinar, you scalp using divergences on shorter term time frames. I'm using a 14 analysis period on the value bars on the S&P 1000 tick chart. Yes, but I would also use, you could also use a 10 bar. If you feel like you're not getting enough entries, use a 10 bar or even a 5 bar. Don't I use MQ momentum intraday as well? Yes, I do. I use all these. The indicators that are my bread and butter indicators are MQ momentum, MQ cycle finder, value bars, and MQ regression / MQ trend. I use those every day on almost every time frame. See you in the trading room tomorrow as well, Brad. Have a great afternoon. How's this different than the materials of the recent seminar with Mark that was expert trade setups? It was 297. Expert trade setups, Mark trades slightly different than me. There may be a little bit of overlap, but there's going to be additional setups that Mark does not cover because, again, we trade slightly differently. If you sign up for the workshop and you feel like you didn't get your money's worth, we'll refund your money. So all you got to do is send an email into support@valuecharts.com on that. On those that do not show on the screen, what do I use? Not sure what you mean, Tony. The same indicators are on all the screens. There's a couple of ones that aren't available to anybody yet that we're testing out that I try not to show in the trading room that often. But all the indicators are the same ones. What time will the trading room open tomorrow morning? It opens up at 8 a.m. Eastern time. Trading room is open every day for futures and Forex at 8 a.m. Eastern. Options is open up at 9. So that's going to be about it for today. Again, don't forget to sign up for the workshop next week, February 19th. Go to www.valuecharts.com/top to sign up for it. We'll make sure we get you in there. Again, if you don't If you do not feel like it was worth it, by the time you get out of it, we'll refund your money. So you can get that back. I've never had anybody say they didn't learn a great strategy from any of the workshops I've done. So hopefully that should tell you something. You'll send an email into how to adjust for Sierra. Yeah, you can do that, Joyce. No, I use, those are the main indicators I use, all the ones that you see in the trading room. Any thoughts on how these indicators would have applied to nat gas after the report this AM? Yes, we talked about this in the trading room. We said natural gas. We were looking at it on a 500 tick chart. Oops, that's gold. We're looking at nat gas on a 500 tick chart. And we said, okay, break was high, so you look to buy on the undervalued dip. So you waited for the break to occur. This was your break right after the announcement. And then nat gas pulled back, and we said, okay, it's come down undervalued. Wait for the momentum to start shifting back to the upside. Once it starts moving back to the upside, which was on this bar, right there, you're getting long. So you would have been long from this bar, which that was at open was at 4.996, and you would have been holding on to that long all day long. So that's how we used it at the nat gas announcement earlier today. Who can you call for more information? If you go to the number you can call is 919-935-0010. So support number is 919. Here, I'm typing it out for you. 935. For what workshop, which indicator and platform do you need? You can be on any of the platforms that we have. What we're mainly going to focus on using is the MQ momentum and value bars, because those are two of the best indicators. But if you have the ultimate bundle, the ValueCharts ultimate bundle, you'll have all the indicators you need to do it. All the best for the upcoming wedding. Do I have time to get married? Barely. Should all your lengths and overvalued, undervalued settings be the same if you have multiple indicators on the chart? Not necessarily. I used to use two momentum indicators at once. I'd have one MQ momentum set to the default 32, 5, and 5, and then I'd have another one set to the longer term analysis period that we were talking about earlier, where you spaced out going 50, 25, and 10, or 50, 25, and 8. That gives you a long-term momentum picture and a short-term momentum picture. Do I trade in the afternoon? A lot of times, yes, I do, if I see setups. All the platforms that we use, we're associated with a lot of great platforms. So it really is, which one do you prefer with your trading? But again, that's going to be about it for today. I hope everyone enjoyed it. We wanted to try to keep this to about an hour and a half, and we are right at an hour and a half now. So I hope you learned something. If you did not get your question answered, feel free to send an email into support@valuecharts.com or to call the support number. I'll be more than happy to answer them for you. You can also email me directly. Now, I might be a little bit slower to answer, but I would be more than happy to answer you myself. My personal email address is twood@microquant.com. Again, see you in the room. Yep, see you.